Hello, everyone. Welcome, welcome, welcome. Let's get our screen sharing going here. Cool. So this will be my last update from America for a while. I'm not going to lie. I'm super excited. It would be 3 weeks, pretty much by the time I get home on Sunday. And 3 weeks in a hotel room is not fun. So yeah, I'm going to make some videos today about my trip in America, what I found on the ground, some wealth insights, etc. So I'm not going to waste your time today going through that. I've already prepared them. But what I did want to do today is I got some good questions. The other thing that we're going to do every time when we get started is that with the Q&A, and just as a disclaimer, I'm not giving you financial advice. I'm just giving you my lessons, my life, what I've learned, my mistakes, and hopefully you can avoid them in terms of that process. Okay, so this is quite a long one. So, hi, Scott. Good to have your contact details. I cannot remember which questions were the good ones, but I guess it was along the lines of why is mom and pop investment strategy not as good as the Wealth Migrate strategy? If one can find the right team members to work with to manage one's properties and growth ROI on the investment is good or better, why not go that route? I'm rather intrigued by investing in different countries, currencies, assets, and structures. Oh, sorry, I didn't even say assets. You should be thinking assets, but anyway. But I guess the question, I'm asking myself is, which Hannes asks himself, is it possible? Can I make it happen? Do I have control of it? His formula for riches. I've also done quite a few of Hannes's courses along with quite a few of Robert Kiyosaki's books and courses too. I do still have much to learn through your crowdfunding concept for property development is very intriguing. I have 2 mom and pop properties, which I have subdivided, and I'm renting them both out myself relatively successfully. And the growth ROI is not bad at all, especially as these times go by and inflation increases. Not to mention the capital growth on the properties over time. They are exceptionally expensive properties, but the return is not bad as time progresses. It started with me subdividing my first house and renting out the other half. So just a quick one. I just want to see, because I did invite Jono here. Jono, are you here? Because this would be a much easier conversation to have as a dialogue. Okay.
I don't see Jono on the list.
Okay, Shane, so I need a bit of help from you because I need to bounce and I almost need you to pretend you're Jono, if you don't mind. Okay. So there's a whole bunch of things here that I want to answer. And ironically, it's probably the rest of the conversation sort of taken care of. So I've got a couple of questions for people before I get going. How many of you know what he's talking about or have watched kind of our master classes or anything like that where I talk about mom and pop investing? Like, if you wouldn't mind just chucking in the chat box, just say, yep, I know what you're talking about, or no. Because I want to respect the people that are in the room and how much detail I need to go into this for. So Craig says, yes, he's heard it before. Tumela says, yes. Mike says, yes. So I have a question from someone who's not here that wants me to answer it for him, but everyone who is here knows the answer to the question. Okay, this is an interesting situation. Ivan, yes, I have had similar properties. Okay, so how should I deal with this? Okay, so let me start with a couple of things. So the first is, that I know Hannes very well. Okay, so this is Hannes here in this picture here. So so in simple terms, the story is in 2002, 2003, my friend invited me to watch, to come to his event, and I was like, "There's no ways I'm going," because I was in Cape Town and I was going to watch rugby. South Africa was playing Ireland at rugby, and if you know me, I love my rugby. Anyway, my mate persuaded me to do it. Hannes had a clever thing, which I've subsequently found out about, where there was a 2-for-1 special. And what that basically meant was my mate was determined to get me to come along because it meant that he paid half. Anyway, when I did the course, I was very intrigued by what I learned. It was a 1-day course, and it was an excellent course teaching people how to do property and all about income. And I actually was so impressed by the course because there were a lot of people in London at the time that were doing property courses that I quite frankly thought were pretty useless. And so I persuaded Hannes to come to London, and we actually did 6 presentations in London with his his presentation. So this was a picture here. This picture you can see in London, doing his one-day workshop, and I sat in. As I said to you, I did it 6 times, and the intention was to train me so that I could teach other people. But what we found was that it worked really well with the expats, but it didn't work very well with people outside of South Africa. And, I don't know how to say this politically correctly, but unfortunately, the British and other nationalities don't take the Afrikaans accent very seriously. So it just, unfortunately, that was a challenge for us in England. My point being is that I then I then went on and I was part of Hannes's university, his Wealth Creator University. I was the very first student to graduate out of it. I've been to his game farm many times. And so I really understand. And him and I even built a business called W Sales in terms of the process. So to or Jonathan, I think it is, I really understand how it all works. I think there's a couple of things that are important. And for me, I want to kind of remind people of this sort of slideshow here. So, sure, where am I going to go? There's a couple of things that I wanted to share with you. So the first thing is that I think one has to take into account that there's some age-old principles to investing, which are very important. And then there's also how the world moves and how the world changes. And one needs to take into account. So in simple terms, I'm going to start with this slide here, because
Scott,
this slide, yeah.
You're not sharing, just by the way. Eh?
No, I'm not. I'm downloading.
Okay, cool.
I'm downloading the presentation. But I want to start with this slide here, just while I'm downloading it. So there's no right and there's no wrong. And I've been through this last week, so I'm not going to go through it again in detail. If you want to go through it in detail, you can watch last week. But in simple terms, there's an old school way of doing stuff and there's a new age way of doing it. The old school way is all about control. So if we go back to even that question, sorry, I know I'm bouncing around a huge amount here, but if I go back to that question, it said the formula for riches. There. Is it possible? Can I make it happen? Do I have control over it? Is formula for riches. Okay. So for me, what's really interesting here is that has been a system that has worked really well for Hannes in terms of buying individual houses or apartments or blocks of a residential property in Pretoria. And if you're wanting to kind of be localized and buy houses, then that's certainly a way to do it. If you're wanting to play as a global citizen, it's impossible. It is truly, truly impossible to invest in multiple countries with multiple partners, multiple different assets, different currencies, and do it all yourself. I guarantee that. That is a fact. Okay. I've been doing this 20 plus years and I've watched millions and millions and millions of dollars lost. Now, last week I explained to you that the old school way of doing it, the old school mentality, was you must control the whole thing. And if you do, because you've got control, it's this whole thing of control. And but you got all the concentration, and when something goes wrong, you have to fix it. Okay. Now, just to give you an example of this, I did a little spreadsheet over literally yesterday. So let's talk about control. My previous business partner and I disagreed on this. So I'm not saying he's wrong and I'm right. I just want to show you the facts. We in the time that we were together, I was running the business and effectively like building the platform and on sales and marketing. And he set up the investment committee. He set up the due diligence team. We had a team of people in Pretoria. They cost us $30,000 a month. You heard me right, in dollars, $30,000. That's more than R500,000 a month. Okay, we had MBAs, we had CAs, We had lawyers. There were 12 of them, to put in perspective. So there were 12 full-time employees. They were paying for the latest research. Plus, they had an investment committee of volunteers of very successful South African property developers. And what's really interesting to me is that when you look at the results, okay, so there were 6 sponsors brought on. A sponsor is a partner. Okay, now we did multiple deals with partners, but ultimately the due diligence starts with the quality of the partner, and then the quality of the partner will determine the assets. Now, I remind you, it was all this old school mentality. I must control everything. These are their results. One partner they got right, a group by the name of Bruce and Paul Solander. I do find it uncanny that that's the only partner I introduced through a lady called Mandy out of South Africa. And we did 7 medical buildings with them, and they were highly successful. Other than that one partner, they had 5 other partners. This is an $100 million raise. There were 5 other partners. One in Austin, all of the medical buildings with Richmond Honan, a multifamily partner, a different multifamily partner, and the development in Australia. 83% of the time they got it wrong. 83% of the time they got it wrong. Let me show you what wrong looks like. This is the development in Australia that was supposed to be so beautiful and pretty. We invested, it was going to be 50 units. We were going to make a 28% return. That's my investment now. It's a $5 million hole in the ground in Brisbane. So if you want to do control, go for it. Jonathan and anyone else, if you want to stick to the formula of riches, I'm not arguing about what's wrong or right. I'm telling you what I've learned in 20 years. Because that's all the control. I control that hole. I mean, whippy, flip, and twang. I control a $5 million hole in the ground in Australia. And we sit in the pub drinking beer and we go, what the hell do we do with the hole? You know, the Olympics is coming up. Should we turn it into a swimming pool? You know, maybe we can drop helicopters into it and do helicopter training. You know, like I mean, I know we're being ridiculous, but what else do you do with a bloody $5 million hole in the ground? So I just want to be very clear here. We've got all the control. Fantastic. $5 million, all invested. No Australian investors involved because us South Africans had all the control. And I'm sorry, I'm really belaboring a point here because this is important. But don't worry, we'll do it differently in America. We'll buy this beautiful building with a highly religious man. He made us pray before all the meetings. He had the 10 commandments etched into stone at the head of his boardroom table. I mean, he was a very, religious man, and we could trust him and blah, blah, blah. Well, he's gone and done fraud, and 6 portfolios of buildings, not just buildings, 6 portfolios of buildings have been repossessed by the bank. So do I feel quite strongly about control? No, it's an impartial comment that I'm making here. Now, on the other side of the fence, you've got the new age way of doing diversification and partnership. And you take a much smaller stake, 10% as an example, and you invest alongside partners that are local. You invest alongside local investors, generally high net worth and institutions. If you've got $5 million, you put $1 million in 5 deals. You don't put $5 million in 1 deal. Now, unfortunately, it breaks the formula for riches because, let's go back to it. Is it possible? So let's answer the Australian thing. Is it possible for me to fly to Australia and do a development? Yes. Can I make it happen? Yes. Do I have control over it? Yes. Okay, cool. I tick the formula for riches. Where's my bloody thing gone now? So I've got the formula for riches, but there's my result. Okay. Now let's look at this and let's go to just some deals that we've done recently. What about this deal in Germany? Okay, this is a big raise. It's about a $6 million raise, and we're putting in $500,000. We're dealing with the guy that headed up Redefine in Germany, and in Europe. The whole of, so Redefine, the biggest property fund, South African property fund in Europe. We literally dealing with the guy that headed it up and partnered and went on his own 6 years ago. All he does is deal with institutional finance. He doesn't deal with people like us. He deals with family offices and institutional investors. And we've got the opportunity to invest alongside him and his investors. So, formula for riches. Sorry, I'm bouncing around here. But is it possible? So can we invest alongside him? Yes, it is. Can I make it happen? Yes. Only through the fact that we've got access to the family office, because none of you would have access, including me, to these type of deals without the family office. Do I have control of it? No, I don't. I am a passive investor investing alongside institutional investors who are arranging the bank finance, who are bringing the private equity to the table, and we are coming in as a small slither of equity in the deal. So it breaks the formula for riches, but in my opinion, it upholds the formula to be a global citizen. And by the way, you've just given me an idea. I'm going to create a new formula. It's going to be called the global citizen formula. Anyway, so, but I can keep playing this game. I don't know how many times you want me to do it. The Phoenix deal, it's a big deal. It was about a $10 million deal. The moment we bought it, there was $1 million in value we created on the day we bought it. We only participated in this deal for $500,000. Again, it was probably a $4 million raise. All of the rest of the capital came from institutional or family offices in America. So exactly the same situation over here. Another one, this Manhattan deal that we did last year. Again, $8 million was raised. We put in 500,000. Our family office put in 1.5. So the international investors were in for about 2 million out of 8 million. And the rest of the money came from local investors, institutional investors in America. So if things go wrong, do you think I'm going to have a big hole in the ground 8 years later? Don't worry, I've got all the control though. Or do you think if things go wrong, I can sit in my armchair and let the local investors sort it out? Like, I'm being super direct here, but I really need some help from everyone. Is this starting to make sense? And so again, back to the armchair thing, do you want to go out and buy houses? Because by the way, I've got lots of experience doing that. I've helped 2,500 people buy houses. I don't even know where to find that slide. Anyway, so I've helped 2,500 people buy houses. Or do you want to partner with partners like this? So you can go and buy the houses all on your own, or you can partner with partners that have got these type of track records. So they've been in business 50 years, they're managing $1 billion, etc. Feltman, $100 million invested with the family, 100 years of experience, 7 recessions, $3 billion of properties owned. This was a building we did right in the middle of COVID. It's paying us 9.6% cash, 16% total return. This is the difference between being a mom and a pop. A mom and a pop is run out and buy a few houses, and a sophisticated, high net worth, institutional mindseted investor goes and invests in a building like that. Or what about MAG? They've got 302 million under management, 9% return. And just by the way, actually, it'll be probably quite useful. Oh, I'll do that now. So, we invested in this building, an industrial logistics building. We invested in this building, which was a 1-year deal, which was a debt investment in and out. And I just want to actually show you this because I'm actually quite proud of this. So let's go and look at MAG now. So now I'm logging into the back end of MAG. Are you noticing the distributions here? So if you own a house, like I don't care if it's in South Africa, in England, in Australia, if you just go buy a traditional house with a traditional kind of, putting a tenant in it, in my experience, unless you do something interesting like house of multiple occupancy, or you do something clever, the rent doesn't cover the mortgage. And it certainly doesn't cover the expenses, rates and taxes and everything else. So you don't put money in your pocket. You are literally hoping for capital growth. But look at this. These are our distributions. Every single month from our two industrial buildings. So you can see what we invested. You can see what we've been paid out. And it's pretty cool, actually. Like every month, money just pops into our account. Do you know how many times I've been phoned to fix the toilet at this building? Never. Do you know how many times I've been phoned to fix the Sky TV or the DSTV or the TV or the fridge or the geyser? Never. It's actually so boring. It really is. Like every month, the money just comes into my account. It's so boring. I don't have any of the hassle. And if you do the maths, it's paying you about an 8% return, cash on cash income in your pocket. So, I mean, that's just one of them. Let's go look at Infinity. This is a multi-family opportunity we got in Oklahoma. This is 700 units, by the way. This was a big deal as well. We put in $300,000. Once again, every quarter we just get $6,000 odd. So this is 700 units. So a mom and pop investor would say, I've read Robert Kiyosaki's book, or I've been on anyone's course, by the way. And I'm not belittling people that teach people to buy houses. It was what you did 20 years ago. But you also 20 years ago, caught a yellow taxi. You went into shops to buy shit. You didn't go on Amazon. You booked your holidays through a travel agent, et cetera, et cetera. Like we got to kind of like evolve with the times a little bit. So anyway, so these are the buildings here in terms of Infinity. And again, you can see here the distributions are just paying out. I mean, again, it's such a boring investment. 700 units that I own a piece of. And it just pays me every quarter, $6,000, boom, 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 boom. And it's so irritating because they never phone me. I don't have to go fix the pool. I don't have to fix the plumbing. I don't have to move any furniture in. Oh my word, the tenant's left. I've got to get maintenance and deal with a management agent. I know none of you know what I'm talking about because none of you have ever experienced any of these problems with residential. So this is the type of reports you get if you're dealing with the institutional mindset versus kind of trying to do it all yourself. What about McFarlane? This is another industrial group that we did. So this is a different type of investment. This was a capital growth investment. So we bought buildings. We raised capital during COVID to go out and buy distressed buildings. So they did a distribution in Q3. There's another one coming in Q4, and there's another one coming in Q1 next year. But again, you can go into the transactions. Then you've got Feltman. This is the one I just showed you, Feltman. You can see here, this one's paying 8.4%. This one's 5.37. If we just go into this building here, we can see the transactions. Again, it's such a boring investment because it just keeps paying every quarter. It even gave us a little special distribution. So, rather than fixing the TV in this building, we were just given a bit of extra money. And it's at this point I sort of ask people, does this slide finally make sense? and have I made my point clear enough? And if not, I actually don't know what else to say. So let me go back through this. And Shane, please help me, and anyone else, please help me. Have I answered Jonathan's question? And I'm not trying to be negative, and I'm not trying to be horrible. I did exactly what Jonathan did for 14 years. I went to Hannes's courses. I went to Dolph DeRuss's courses. I spent $8,000 going to America to go on Dolph DeRuss's courses. In fact, you've all read this book, Real Estate Riches, where, he says, go out and buy, look at 100 houses, make an offer on 10, get accepted for 3, buy 1. I've done it all. I'm not being rude. I really have. I bought 16 residential properties in different countries. And then I had the privilege of meeting Tony Robbins in 2010. And he said there's a much easier way to do it through mastery, modeling, and ultimately partnership. And in 2014, we started doing our first investment in commercial buildings. And it was just a game changer for me. So for 10 years, I've only done institutional investment. However, saying that, for the first couple of years of even doing commercial property, my partners and I made a mistake, and I'll own my mistakes. I was part of it. I'm not passing blame. Where we went out and we just took that old school mindset of control, and even though we were doing commercial property, not residential property, we focused on owning the whole thing. And that's why we've got a big swimming pool in Australia, and dealing with problems in America. And ever since we changed to the institutional mindset of this, I now have the privilege of just looking at distribution schedules like this from sophisticated local investment partners. They've even got dashboards and everything else. Ask my Aussie partner where my dashboard is for this. Oh, wait, he doesn't have one because all of us foreigners invested, etc. So, have I answered this question, yes or no? I don't know how much more to go into it if I haven't. Let me see the comments here quickly. Sorry, I've only got one screen, so it takes me a little while to kind of go through it. Okay, yes, it does make sense. Makes sense. I want to be an armchair investor. Yes, it makes sense, as I can build diverse investment portfolio without taking the risk. There's still risk, Craig. I just want to be clear. Sorry, guys, whoever's drawing on my screen, please can you stop it? There's still risk. I want to be very clear. Like, no investment in the world has no risk. Even putting your money has risk. But I believe that if you go back to the slide, from my extensive experience in doing this, and that's not being arrogant, that's literally actually more telling you what I've watched, how people have lost money. I believe the risk is a lot lower by investing with institutional partners that versus trying to do it on your own. But there's still risk. I just want to be clear. For Jono, his investment model must align to his financial freedom plan. Following the mom and pop model, he is tied up to South Africa. Yeah, so I think that's the point, Craig, is that, this model works. If you want to be stuck in one country with one asset, one currency, you do it all yourself, fine. If that's what you want and that's what floats your boat, then do it. I've got no problem with that. I'm just pointing out that that's what mom and pop investors do. That's what retail investors do. And they get the returns. We know the returns that they get. And we also know that the top 1% get far better returns because they invest in better assets. And we really just need to decide which side of the fence we want to play on. I'm not saying one is right or one is wrong. I'm just pointing out a very obvious fact. And also saying to people, if you want to partner with us, we only play in this game. Because every single opportunity I've looked at or been part of on this side of the fence has almost has not worked, basically. I'll give you another example. So I'm meeting with a guy. I don't know if I'll be able to find their website at the moment. Well, let me just see here quickly. I'll just look here quickly if I can find his website. Boom, 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 boom. Where the hell is he now? Okay, so I got a question for you before I share my screen. So you got a choice now, okay? You got option A, where you're going to follow the formula for riches and you're going to have all the control. So I met a guy yesterday. He helps people buy houses in Florida. He'll help you run around and find a person who's got a problem with a house in Florida. He'll help you buy it, and he'll help you manage it. Okay, so that's your option A. Okay, but you got complete control. You put the money down. You don't even have to get finance from a bank. You're in complete control of the property. And again, but like we're expanding our mind. We're not just stuck in Pretoria anymore doing a deal. We still have to partner with someone, so we don't actually have that much control. But let's just play along with me and say you got control because you own the asset 100%, and it's in Florida. Or you could partner with this guy. So this is their website. Okay. And if you look at their team and their buildings, they've got 26 people that work for them. This is the guy I'm talking about. His name's Bruce Saunders. He's also South African, so you could, if you like that. He's been in America since 1997, so that's nearly 30 years. He's a chartered accountant. He's only worked in property. And anyway, it's his company. This is their team. And they manage, okay, I've got a little fun game for you. They've been going 18 months. Okay, they started their own company 18 months ago. How many properties do you think they manage? Just chuck it in the chat box quickly. I want to play a little game, as if you can see the size of American scale. So they've been going 18 months. How many properties do you think they manage? Just chuck it in the chat box. 100. Craig says 100. Anyone else? 12,000. Anyone else? Go on. Have a guess. Play with me. It's 6 o'clock in the morning here. 500. So I've got 3 people that have answered. Maybe 1,000. Okay. They've been going 18 months. They manage 17,000 properties. 17,000 properties. Now, what Bruce has done all along is he's not a management person. He partnered. So just by the way, he partnered with Tracy. Tracy is one of the best known people in the southeast of America in managing multifamily, which are where you own, big units, where you own all the units. And she worked with Bruce for 11 years. And believe it or not, she managed 90,000 units for Bruce's previous company, because it was an investment company. So she managed 90,000 units for him. He was for his company, his other company that was doing investments. Anyway, the two of them decided to branch out 18 months ago, and they've now set up their investment arm as well, vidacompanies.com. So this is brand new. But they basically are going out and now building and doing their own multifamily projects. So these are their first couple of projects. This one, this one, this one, and this one. These are all their projects. They're raising $46 million at the moment. And the question I have is, I've got to show you this one last thing here. Is that what's really important here is that the entire investment is about 300 million plus. Okay, 300 million plus. Okay, they're getting bank financing, they're bringing in private equity, and we've got the opportunity to get in with maybe $500,000 into 3 massive opportunities, like 800 units. So you got option A, where you can invest in Florida with Simon. I met Simon yesterday, and he helps people from England invest in houses in Florida. So that's option A. We got option B, where you can invest in Bruce's company, who already manages 17,000 units. I will ask him his track record. I don't know it, but he has done billions of dollars worth of investment and is currently raising $46 million from institutional investors in America. And we can participate with $500,000 alongside him. Option A or option B? Let's go. Let's put it in the chat box, and we'll see if you finally understood Jono's question. So Craig says B, Mike says B, Shane says B. And someone else just left because they're like, it's too hard. I don't know. Is there an option C? Timena says B. Mag says B. If you don't get it right, you can't invest in the deal. That's the rule. It means you haven't passed the test. Oh, well, I'll just have a bit of fun by myself here in America. Anyway, okay, well done to all of you that said B. Hey, listen, there's no right and there's no wrong. If you want to abide by the formula for riches, you should do option A because you got no control in Bruce's deal. Zero, none, zero, nothing. You won't be able to go and determine where the tenants are put in. You won't be able to fix the fridges. You won't be able to organize the debt. All you'll be able to do is put your money in and then wait until you get paid your money out. Like, it's a terrible, terrible deal if you're wanting to do the formula for riches, because you have to sit on your ass and do nothing while you get paid. Sorry, I'm just having fun. It's like, it's the first time in my life I've been quite so direct about this, actually. I think, Shane, I mean, you've watched me do this lots of times, but I haven't been this direct, have I?
No, I think you this is definitely a first.
Anyway, okay. I think enough said on that question. I assume I've answered Jonathan's question, and I want to be very, very clear here. I adore Hannes. I really like what he teaches. I love the way that he changes people's mindsets away from, the fact that they are stuck in their job and they're stuck with their financial advisor. I love what he teaches about managing risk and income. I just believe the world has evolved now from buying an individual house in Pretoria to being able to do it in a far with a lot less hassle and far better return, but with a different mindset shift. I think it's like the next evolution, if you want to call it that. So it's not taking anything away from what he's done, it's adding to it. I think it's really important to put that in perspective.